I know it's late there, so we really appreciate you staying up to talk with us. You went out the door in August with the IPO with a list price of $15. You're now trading in the US on the ADR at 39. The stock has more than doubled. Do these numbers justify that share price performance?
Well, I think as a company, we do not really operate based on where the stock price is. We certainly really happy that our shareholder has received good value and the stock has performed well. But we have not really been operating the company because the stock market prices. But what we can say is that generally in the last few months, we have seen a significant pickup in terms of momentum in the Chinese EV market, and players like XPeng and others who are really focused on smart EV products are getting the benefit of that. And I think that's one of the reasons that catalyzing this movement in stock price for the sector.
Brian, there is a lot of competition, and obviously Tesla's one of them, but a homegrown EV car competitor is NIO. How did you achieve manufacturing profits so quickly versus NIO? I mean, what are you doing that's so different, particularly because you offer your vehicles at a lower price point than NIO?
Yeah, I think obviously this quarter we achieved the gross profit for the first time as a company. I think it attributed to a number of factors. First of all, we have a better product mix. Our newly launched P7 sedan is a high margin product. It's selling very well. We actually have delivered over 6,000 vehicles in the third quarter compared to just a few hundred when we start delivering in the second quarter. Secondly is that overall, I think given the volume increase of our vehicles, our production costs and labor costs actually has been reduced because efficiency gains, because of volume and economy of scale. And also continued cost down on materials will also contribute to the gross profit this time.
Brian, Tesla is, though, lowering the car that competes with your P7, the price of the car that competes with the P7. How problematic do you think that's going to be with that Chinese-produced Tesla?
Well, I think Tesla is certainly a very worthy, competitor for the Chinese EV players, including XPeng. Their Model 3 is selling very well in China, particularly after domestically made Model 3 lower their prices. But I think the phenomenon actually turbocharged this market development for EV, as a smart EV for that matter, because more and more gas engine, sort of drivers are now switching to smart EV because I think the education provided by Tesla and the other players. So I think in terms of competition, definitely, we welcome better products to be available in China, and we certainly think our product P7 has certain advantages over competition because its smart features locally developed. But overall, I think the better product in China will overall catalyze the conversion from gas engine vehicle market to EV market much more quickly.
That's definitely what most car makers say about Tesla, the diplomatic line. But at the end of the day, you still have to sell cars. You still have to make the cars. So can you sustain these profits if you're dealing with a cheaper Model 3 and you still have to deliver two new models over the next 2 years?
Well, I think we are already living in the environment where Tesla has lowered their prices and then seen the effect of the Tesla lower the prices. In October, actually, when Tesla announced the price cut in the beginning of October, I think there's only I would think short period of pressure that we felt in the sales front. But then I think we quickly absorbed it, and now we look back, October as actually record month for sales, and November seems to be a month that's going to beat October. So I think we haven't really, been constrained because the Tesla competition. I think overall market growth is very exciting here.
Alex talks about you making cars and being a car maker. If you were a car maker, you would not have the valuations that you have at the moment. You're an EV car maker, but even then you probably wouldn't have the valuations that you have at the moment. Do you think, like Tesla, that you are valued as something differently? Do you have aspirations, like Tesla does, to be an energy company, a broader company than simply a car company?
Well, I agree with you. If you are simply an automobile company, I think that valuation matrix is very different. What we believe that in the long run, the differentiation is actually the smartification, the autonomous driving, the cockpit experience inside the vehicle that has the smart features that's truly differentiating. Even I think for electric vehicle, electrification will not be the core differentiation in the long run. I think also with the smartification features like autonomous driving, like the interaction you have in the car, you can actually find a lot of ways you can actually monetize differently from current automobiles because you are directly interacting with your customers. You have a lot of data from the road, from the driving, that you can actually find scenarios that you can actually create monetization strategies that's different from traditional auto. And in the long run, I think if you have the ability to provide differentiated, smart, autonomous driving features, you may be able to actually get into the operating side of the business that's truly changing mobility services in the long run. So those are exciting things that smart EV players can do compared to traditional automobile companies.
So what does getting into the operating side of the business mean? Because like Tesla, in essence, is going to become a battery storage company at the end of the day. So what is the operating opportunity then?
Well, I think there's a number of ways you can think about operating opportunity. For example, if a vehicle can truly be, autonomous, then obviously you disrupt the mobility, operations quite dramatically because the largest cost component is the driver cost for, mobility and ride sharing. Secondly, is that if you actually have, the smart cockpit design and an operating system that truly provides integrated experience, then you can think about ways to monetize that experience through comfort, entertainment, productivity, and other ways. So those are things that I think are truly a smart EV company can think of because the integration of software and hardware.
When do you think you're going to be fully profitable, Brian?
Well, I think, obviously we're still a young company. We're growing fast, but I think we're growing from a small base. So I think it will require us to hit a certain volume before we actually can think about profitability. I think, for us, probably getting to, 150 to 200,000 vehicles annually production will be the scale that we needed to achieve profitability.
And when's that going to be?
I think that will probably be in a few years' time.